Welcome to On the Edge, a show examining how deals actually happen in commercial real estate. Host Malcolm Davies, founder of Way Capital, speaks with professionals in development, investment, finance, and more for insights into how these business leaders get deals capitalized. Malcolm's career spans more than 20 years, during which time he has managed nearly $20 billion worth of financings. Now to your host, Malcolm.
Hey everyone, welcome to the next edition of On the Edge. I am thrilled to have Cubby Sporrong with us today from Angelo Gordon. I've known Cubby for a number of years now and excited to have actually my first female guest of On the Edge. So Cubby, welcome to On the Edge.
Thank you. Thank you for having me. Happy to have this conversation.
I think, I've known you for a number of years and I've seen the growth of your career. Maybe if we could just get into how did you get into commercial real estate and private equity in the first place?
Yeah, happy to go there. I'll try to make it quick, but I will also give you probably maybe more full of a picture than you asked for. But fortunately for me, I stumbled into the business. I went to USC for undergrad, and for anyone listening who's not as familiar with West Coast universities, University of Southern California is a magnet for commercial real estate as far as alumni and just generally. And I didn't really know that when I went to the school. I went there for the entrepreneurship program, but fell into a commercial real estate class taught by Steve Silk, who, for anybody who doesn't know, Steve is an extremely generous person with his time and attention. And fortunately for me, he decided to, hold my hand and walk me through what commercial real estate was as a business, and became really my first mentor ever before I even knew really what the word mentor meant. Silk was the person who told me, you can do this. And you mentioned being the first female guest on your podcast. Silk was also pretty aware that the business needed more women. And, what I appreciate about him, I appreciated it then, and I appreciate it even more now, was him saying, it doesn't matter, you've got this. And so I dove in head first, and really the guest speakers that came into that class were very interesting individuals who made the industry sound very exciting. And I realized quickly this is a combination of relationships and, technical skills. And I like that. I don't want to be at my desk all the time, but I don't want to never be at my desk either. So it just kind of worked for me. And I went head first. My first internship was with CBRE, and I met great people there and had great training, and then bounced around. I interned at Lincoln Property Company. Another shout out to David Binswanger for being another person who really believed in me early. And then out of college, I worked for East Still Secured in New York. And that was a phenomenal experience, both to be bi-coastal and work in New York, also to work at East Still and just that fast-paced environment, to work on, hundreds of transactions, to work 100-hour work weeks as well. Really hit it hard. And then the opportunity at Angelo Gordon came up, and I always wanted to really be an investor. I always wanted to be a contrarian investor and target higher returns. That's just what I saw happening with some clients at East Still. And I thought I wanted to play in that space one day. So when that opportunity came about, I came back to LA and joined the team here. I've been here for 6 years and loving it.
Amazing story too. And we'll get into the ethos of, On the Edge is how deals get done. But, obviously, I think we all can agree there should be many more women in the industry. And maybe we can take a moment just to talk about really some advice too, because I think a lot of folks and many women watch the podcast. Just what would be your advice if you were looking back, obviously, your career and, going to USC, working in New York and then the like, taking those internships. So what would be kind of your one type of advice that you'd want to give to future aspirations of younger women coming into the, either in university or thinking about getting into commercial real estate?
Yeah, first point would be that whether you see a lot of women in the business or not shouldn't really matter. There's a saying, if you can't see it, you can't be it. And I hate that, quite frankly. It's not true. You can do it. And I think having that positive perspective that you're different and that's a good thing, and there's an angle for that, is really helpful. So if someone else isn't telling you that, let me be the person to say, you have an angle, you're thinking about deals differently, you have value add. And that's really important to bring that to the table and be confident about it. Of course, you're going to have to work your tail off, but so does everybody else. So go forward and be confident and you'll be very successful. But, to men in the business or older women or more experienced women, I should say, who want to encourage younger women, I would also say, don't forget how much your words of encouragement mean to someone else. So many chapters of my career, I remember a specific breakfast in New York City where Brett Siegel, said to me, you can do this. This is just the very beginning of a very long career. I have a ton of faith in you. And that was Rue 57, 2017 summer, and I'll never forget that breakfast where, he really gave me a pep talk and it changed the trajectory of my career. I probably would have walked out the door if I didn't have those types of conversations. So another thing is maybe, when you're feeling down in the dumps or you feel like you can't do it, whether you're a woman or a man, don't be afraid to get coffee, get breakfast, get the pep talk. It's okay. We all need a pep talk sometimes. I still need my pep talks, but I'm also aware now of how much those meant to me. And I'm not shy about, giving that advice to younger people in our business as well. And even constructive criticism, I think a lot of people are afraid of giving constructive criticism because they don't want it to be taken the hard way. But if you never do that, the person never grows. So, another conversation I remember, and I owe this person a shout, is Brian Russell once. We went to a meeting and I was a, brand new associate. I had just gotten promoted, but I came to the meeting and I just took crazy notes. And I think I asked maybe one question, but I was taking crazy notes. And he pulled me aside and said, if you want to be taken seriously in this business, you can take notes, but don't be a secretary, ask 5 questions and, take little tiny notes. And, you're doing great, but just wanted to give you that because I know you're going to be in a lot more meetings to come. And I want you to know that. And that's huge advice. If he had never told me that, I'd probably still be, doing that today. So advice and feedback, just don't be holding things in, treat people like they're adults and, even when they're analysts, and tell people, what they can do to succeed, how they are already on a path for success. And those conversations, at least for me, went a really long way. So sorry, I rambled quite a bit, but
no, this is great. I mean, my mom was a NASA scientist, and
wow.
she was one of the few women at NASA in the 1960s and 70s. So I'm a product of a go for it and a mom who, trailblazed back in an era when there were not many women doing certain things. And I am just, I think real estate will be much more successful with more women in the industry. So there's no question about it. And really, I love hearing the story, and I know others will definitely love hearing that story. And hopefully from this podcast, there'll be others that you can mentor and help guide along the way.
Yeah, I mean, also to anyone who ever wants to talk about any of this, it's something I'm passionate about. So yeah, feel free to reach out.
No, that's great. So let's get into it. So as we've talked about previously, On the Edge is about understanding really how deals do get done and what people and what groups are looking for. Maybe if you could, Cubby, talk about Angelo Gordon's kind of thesis about the market, how you guys approach the business, from how do you review the opportunities, and then kind of what you're seeing today. And we'll get into a little bit of how the future looks, but would love to understand, how Angelo Gordon and particularly, your team is looking at, opportunities in today's market.
Yeah, absolutely. So I'll start really high level for those who aren't as familiar with Angelo Gordon and just give you state of the market in terms of the capital that we are working with today, because that really informs everything that we find interesting or not interesting at the moment. So, currently we're investing on behalf of our latest fund, which is Realty 11, which is a $2.7 billion vehicle, is our flagship value add fund, and is targeting high teens levered IRR deals. So, looking at everything through that lens, everything has to be, call it a 17 and above. So, there are very interesting core plus deals that just I can't bring to investment committee, but are probably great deals for a core plus vehicle. So I'll just, caveat my answer by saying everything is through this higher value add lens. And then, another point that's great about working here that I really enjoy is that we cover all asset classes and we cover, the nation. I sit in LA and cover Southern California and the Southwest mostly, but we have one investment committee that looks at all markets. And, we are very much in the best idea wins category. It's not pushing deals. I have to put out 200 million of equity in LA, so I'm just going to jam through my LA deals. We are very much a team, and we will put an LA deal side by side with a student housing deal. And, we'll say the risk adjusted return in student housing looks better than what I'm seeing here in LA. I'm going to advocate for the student housing deal. So, we have a really strategic advantage of having different investment professionals across the country focused on all asset classes, including alternatives. And then we work with best-in-class operating partners who are on the ground, who are really showing us, corner by corner, they find these situations where there's value add. And, because we have this combination of boots on the ground, operating partners, really strong relationships with those operating partners who we trust, who we have been working with for years, on top of a hyper local, capital investment team who talks weekly, we're able to compare those risk adjusted returns and then dive into the sectors and the markets that we believe we have conviction in. And again, conviction in finding value add strategies, value add returns. So, present day, we are looking at a lot of alternatives. Again, I mentioned the student housing deal. We're looking at seniors. We've got a good portfolio of medical office that we're continuing to build on. Late last cycle, everybody wanted multi and industrial. Those sectors are still in favor, of course. Where within multi and industrial varies by market. And then, historically, we were a large office player. We've not been for a while, but we have some great relationships with office operating partners who we very much believe in. And I think there could be some interest there. We'll see. Retail, of course, we're hunting for retail. We're hunting for, everything kind of up and down that sector spectrum. And then in terms of markets, every market is going through its own cycle. So, you take a look at industrial in the Inland Empire and you talk about that cycle. Rents went wild during COVID. Yeah. They came way down. And then, is it stabilizing? Is this the bottom? Should we be buying? It's a question a lot of people are asking. We're digging into it. You talk about San Francisco, you talk about Phoenix industrial, for example. Every single market has its own story, has its own cycle, and how you invest at any point in time is within that view. So is it a growth cycle where we should be developing? Is it a distress cycle where we should be playing in the capital stack somehow? Those are all questions that local market leads and our operating partners, we kind of just work together to build conviction around each strategy.
So you mentioned, I know how many great operating partners you do have. What is that process to become an operating partner of Angelo Gordon's? What does the gauntlet look like to get there, to get your first deal done with you and your team?
Yeah, it's a great question. Our operating partner network and our operating partner relationships are far more important to us than any individual deal we do. And, I really cover operating partners almost more than I cover a market. That's really the lifeline of our business and how we are going to be successful. So it's very important to us to have those relationships and to be able to repeat business, of course, with these groups. It ranges from, more entrepreneurial groups who have just spun off something that was larger and more established, who we, maybe were their very first call and we helped get their very first deal done. We love those stories. And then we've also partnered with, on the other side, the Heinz of the world, very established groups. So it's a range, but I would say, across the board, we're really looking for groups who are highly sophisticated on a deal level. They understand why the deal makes sense, how to add value to the deal. They're highly sophisticated on a property level, physical specs, how we're exactly going to spend the capital dollars, what's the exact execution risk, how well do you know the sticks and bricks? And then also on a tenant level, how are you managing those relationships? And then you put that all together, and it's behavior both as an investor and behavior as an operator and adding that value. That's where, it's like, okay, you guys are really best in class. You have the right focus in this asset class, in this market. You have a track record. You have the right team in place. You know what you don't know. For example, we've partnered with groups where we thought we were buying an office building, and it's going to go down a different, I'm trying to remain confidential about certain things, but say it switches sectors, and you go down a different way. Maybe we need to bring in a consultant who better understands data centers or apartments or townhomes, whatever it is, and having, the right relationship where everybody can be honest and acknowledge that. Sometimes that's really important. But this whole business of blocking and tackling and hustling and changing and pivoting is really not one for the faint of heart. So, we're also just looking for grit and resilience and somebody who will roll up their sleeves and work really hard to earn a promote. And, that's when everybody's happy. So we like to think that we add a lot of value as a capital partner in letting operators do what they're best at doing, and we can trust them. And I can say to our operating partner as well, who do you think is best for the leasing? Like, this is, this is your decision too. And you know it better than I do. And, those relationships are super valuable and really the most valuable part of our job.
I think relationships are pretty much the entire business. At the end of the day, you make more mistakes with bad relationships than the positive ones. Even on good deals, a bad relationship makes the deal go poorly. Generally, it's interesting. You mentioned something that we see often in my seat, which is individuals that go work at these incredible platforms, institutions, and they've been around for a long time. And they spend, 10, 15 years or whatever it may be, maybe a little less or maybe a little more. And then they go off on their own and they launch themselves. But they have this pedigree or this background. They've learned how to run their business. Would you say like that's the kind of profile, advice for a sponsor to kind of become qualified to do business with Angelo Gordon? It seems to me that that's a great way to get there, so to speak.
Yeah, it's a great way to get there for sure. I mean, we've seen people come from the capital side. We've seen people come out of brokerage. We've seen people come out of other operators, other developers. And, this business is one where you really can't shortcut experience and investing through cycles, investing across different markets. And so, fortunately or unfortunately, it's very rare that you see like the 22-year-old hitting a grand slam. It's not like tech, right? Yeah. So typically, it's somebody who has been, pretty experienced, but is also, at the right point in their career where they're willing to take some risk. They're willing to put in their own equity into an investment. They're willing to partner up with Angelo Gordon and, go find a pipeline of deals to do together. So they're willing to hit the pavement, go knock on doors, go, fight the good fight. So it can be extremely rewarding, but it's that combination of a lot of experience and also willing to take the risk.
So do you find yourselves generally chasing opportunities together with operating partners, or do they tend to tie up something and then come to you? What's the best approach in sourcing deal flow and generally while working with Angelo Gordon?
Yeah, there's no right or wrong way. Of course, if you've got the deal tied up and you need to find capital, that's great. There's a price that you've got it tied up at. I assume you've done some good work. So a lot of the questions I'm going to ask you about the deal are ones you have the answer to, and that can be great. Alternatively, we understand what it's like to be an emerging player in a space and go bid on a deal and not have your capital tied up and go into, say, a buyer interview and not have your capital there. So if we need to talk earlier so that we can go into it together as, the most secure and credible buyer, then that's okay too. We're willing to work at either stage of the transaction process, and we have a lot of sympathy for those who are, getting on their feet for the first time. And, we want to be flexible and nimble so that, I would never say to someone, go tie it up and call me back. That's not a very workable answer. But at the same time, of course, it's always a little easier that way.
So you have a lot of partners and a lot of operating partners. And so how do you manage crossover, either geographic, assets, type, that if you have conflicts in that regard, or how do you allocate yourselves in as it relates to your selection of operating partners?
Yeah, it's a good question. For example, every now and then we'll see a deal from one partner on March 1st, and then on March 5th, I see it again from somebody else. And
Sure.
I think just honesty and, over communication is the key there. So,
Mm-hmm.
and honestly, just when you're friends with people, it works out. So, and every operator has a different angle on the deal as well. So sometimes you'll see it from two people, but one person is looking at it as at an office building as office, and somebody else is looking at an office building, tear it down and make it industrial. Those are two different business plans. And, my job really is to help capitalize the most interesting business plan for a value add opportunistic return. So it's okay sometimes to look at things differently and get intel. And again, everyone is friends. If you're part of the Angelo Gordon operating partner network, you're part of this family. And, if somebody doesn't know something catastrophic about the deal and somebody else does, we're going to help you out. So it's an honest conversation, and it's that relationship being strong enough where everyone knows that everyone is doing the right thing is kind of the only way to make it work. But, we've even had situations where we've brought operating partners together to trade notes, and we host a big operating partner conference every other year in Aspen where we get all of our operating partners together.
Nice location for that.
Yeah. And, people are technically competitors, but we just have a great conversation, and people trade notes and they improve their businesses, and they think to themselves, oh, I like how they thought about that. I like how they thought about that. I'm going to go call that person and see if we can partner together on stuff. So it's more synergistic than you think. It just kind of works. We've never had a problem with it. Yeah.
That's great. And so, look, we're in a time frame of a lot of volatility in the markets. Your interest rates have been highly elevated for now north of 3 years, or almost 3 years since the rise of rates. You've seen a lot of challenging situations in certain states with either geopolitical risk, I guess, where you have, things that get elected, and, or, for example, in Los Angeles, you have transfer tax situations where maybe you hadn't underwritten that previously. How does AG look at really kind of where we sit today, including all of the risks that are out there? Do you make blanket assumptions, or do you just sit there and say, hey, we're okay going to this investment area because we think there's an opportunity, there's underlying intrinsic value? Or do you say, hey, we're not positive what the government might say or do, or and that changes your thought process? I'm assuming it's all together, but how do you all see that?
Yeah, it's a combination of all of it, right? There are certain risks that we don't feel very comfortable in, and I would say we just deprioritize sourcing in those sectors of the market, and to some extent. So, for example, some of these, union hotel markets have just been really complicated, and it feels like more and more bad news has poured on top of itself. And so we've maybe just deprioritized it, but everything we're investing in almost has some inherent risk, whether it's tariff risk, immigration risk, it's union labor risk, whatever it is, that's our job, to invest through that and underwrite it correctly and, execute through it correctly. So I do think it's a time to keep it simple, stupid. I do think it's a time to, look at replacement costs, look at basis, look at, lease comps and sale comps and pick your spots and find where there's intrinsic value and move from there. I think if you're making a bet only like because of one of these risk factors that you think will or won't take off, that's not exactly how we invest. And we think that there's much more to look at, but everything is sensitized, of course. And, we can't buy LA industrial without talking about tariffs, of course. So we're going to run a sensitivity on what happens if lease rates really fall, if vacancy really picks up and we're wrong. And we're going to take a look at how bad that could be. So I think it's understanding your downside risk, of course, but also, when there's the right basis play, when there's the right story, when there's an asset that really needs the value add that we can provide, it's our job to go add that value.
Yeah. And I'm assuming, I'm just thinking about AG and the profile of the deals that you do get involved in. You're thinking about, so many different factors, but at the end of the day, while there's some complexity in the business, it is really the basics. Keep it simple, stupid is definitely the right approach. One thing you can't change at the end of the day is the price you pay for something, or the basis for that plus a CapEx, right? And so it seems that, as much as it's complex, it can be relatively simple.
Yeah, and I think that, there's what you can control and what you can't control. And what my job and our team's job is to do is to really diligence what we can control. And we can control our basis. We can control the capital we're going to spend on that value add project. We can control the type of debt we finance our assets with. We can control who we partner with. If that partner is really the best in the business, of course. We can, control how we underwrite the deal and who we do it with. And if we're really diligent about that, then our opportunity to really miss is at least limited. If I at least understand my downside risk and I've made every single call I can to every single broker and I've gotten different quotes on the CapEx project and I know my range of outcomes at this point in time, that's the best we can do right now. And that's the most responsible thing we can do right now. So I think our team does a great job of that. But of course, that we all saw secular changes with office and COVID. How would you have known that? So, what we've done is managed within that. And we're also cradle to grave, which I think, again, really helps with that accountability. So, for example, office acquisitions we made before COVID, we underwrote those assets as remaining office assets.
Yeah.
We saw a secular shift. And fortunately, we were partnered with one of the best partners in the business. Another shout out to Park Miller and Christian Tober, who are Lincoln Property Company in Orange County, who have done a phenomenal job adding value to those office assets, partially by looking at repositionings as industrial and as multifamily. And we've been able to recoup a lot of equity by being creative, going through really tough land use projects, going through really sobering and hard conversations of what would it take, to knock this building down and make it industrial. It's stuff that, you would have never thought about, but because we have such hands-on asset management and we're so focused on, creating value for our investors that we stay on at cradle to grave. And we are, again, partnered with one of the best, we are able to work together and get through that and have, a much better outcome than would have otherwise happened if you had somebody who just kind of said, oh, well, all office is bad. Wasn't my fault. Never would have thought this would have happened. Oh, well, we didn't do that. We didn't give up and our partner didn't give up and it's going to be a much better outcome. So I think that hands-on asset management is another thing that just cannot be missed out on.
I think it's a testament to, frankly, the investors of your funds. That's really the key when you as people invest with AG, those are the stories that they want to hear. You didn't just say, hey, office is bad, so you lost your money. everyone else did. You kind of came up with some creative ways to figure out ways to generate returns that definitely weren't there when you made that investment, and you would have never seen it. And I think that's a huge takeaway about how the success of AG has grown over the years. And so amazing.
Yeah, I really credit that again to the operating partner network too, as well, and to the way our team is structured, covering all asset classes. If you're in a silo just talking about office all day long, you don't think of these things. And fortunately, the combination of Lincoln, that long-lasting relationship, looking at what is Orange County Industrial doing, what is Orange County Multifamily doing, and seeing those markets rip and realizing that there was opportunity there is also helpful. So I think that that's a good example of it all kind of coming together, and again, just taking control of what we can.
What as we get close to the finish of this great podcast, where do you see the world and where are we going? I try to ask people to ask where they see the future, but I'm assuming in these investment committees weekly, you're thinking about cycles and where we currently sit within a cycle. And by the way, like you said earlier, it's all different. It's different geographically, it's different asset classes, but just in general, one of the main kind of thoughts we always try to think about is like, okay, are you underwriting future interest rate predictions in your exit strategies or not? How do you all see where we sit today, kind of year 3, 4 of what we would all perceive to be a downturn?
Mm-hmm. Yeah, you could probably talk about that question for another hour,
Yeah.
but I'll try to stay shortish and say that generally speaking, we believe we're in a higher or more normal for longer, and therefore you need to underwrite exit cap rates appropriately for the risk of that. Generally speaking, that rate environment. Generally speaking, and if you look at last cycle, if you just invested in industrial and multifamily, it almost didn't matter where or what or with who. You won, right? You picked the right sectors, and if you got out in time, you pretty much made money. And that was a lot because of where rates were and just cap rate compression across the board. And those sectors being so much in favor, and the competition that you had on your bid sheet just drove yield way down because everybody who was in office now poured into industrial, now poured into multi. And you saw this great cap rate compression, and you didn't really have to increase NOI. Maybe you did increase NOI because rents also really increased in many of those sectors, but that's not going to be the case moving forward. It will be a story of winners and losers, and it will matter which markets you're in, which product you buy in those markets, and who you buy it with, and how you finance it. So, we do believe this is an operating partners cycle. This is why we exist. This is our time because we partner with the best operators who know that this building on this corner will lease and this one just catty corner won't. And that insight, that on the boots insight or on the ground insight is where we think that there will be a difference because, it will really come down to what tenants want, what leases correctly, and execution risk. There was a lot of half-baked renovations or, just not quite done right, but you kind of got away with it. And that's not going to be the case anymore. You're going to have to execute on your business plan. You're going to have to increase NOI because rates are again, we believe, higher or more normal for longer. And I think that's, again, just where we are going to lean on our partners. And then it also is an opportunity for these alternative asset classes. Again, senior, student, healthcare generally. We think that those sectors are definitely interesting.
Cubby, thank you very much.
Yeah.
Can't thank you enough. And we're excited to have forever, when we have 100 future episodes, you're always the first. So thank you for being the first female to join us at On the Edge. And thanks a lot. And Cubby, when we post this, we'll make sure that if anybody wants to get in touch with you, we'll find a way. So
great.
Thanks so much,
Thank you. Thank you, Malcolm.
All right, take care.
Thanks. Bye.
Thanks for taking the time to tune into our latest show. As always, you can find us through our YouTube channel at youtube.com/@wayontheedge or at our website at www.waycapital.com. Until next time, keep working on the edge.